So first things first, learn how to do research and get data. Let's watch this short video from Trump, okay, and the White House that they just launched sometime today. It was from yesterday. It's sort of like a recap.
This is one of the most important days, in my opinion, American history. It's our Declaration of Economic Independence. My fellow Americans, this is Liberation Day. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. American steelworkers, auto workers, farmers, and skilled craftsmen watched in anguish as foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, foreign scavengers have torn apart our once beautiful American dream. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. We are finally putting America first. In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world. We will supercharge our domestic industrial base. We will pry open foreign markets and break down foreign trade barriers. More production and means stronger competition at lower prices. Stay on. We're not going to let anyone tell us that American to produce the guns and ships, airplanes, and medicines that we need right here in America. Going to build our future with American hands. This will be indeed the golden age of
Ooh. So I wanted us to check that out first. So just to start it off. So you can see gone, not gone, but we welcome what is being called now MAWA. Okay, MAWA. If you don't know what MAWA or the famous MAGA means, MAGA was a famous, or rather the tagline that Trump ran with during his presidency, saying "Make America Great Again." But now we have MAWA, which is Make America Wealthy Again. Well, they're already wealthy, but it's Make America Wealthy Again. Okay, so I don't know how much wealth they're looking for, but that is quite, it depends with your school of thought, okay, where you're coming from. So what are these tariffs and what are we doing? What do this Liberation Day reciprocal tariffs mean? Okay, because you can see Trump has imposed a lot of tariffs around the world to different people. So you can see there are a couple of countries that have more tariffs compared to others. So first things first, what has happened? We've gotten what he's established is what we call the universal tariffs, okay? Universal world tariff. So everyone has a 10% universal tariff with America at the moment. So universal tariff means everyone has a 10% import tariff if you're dealing with the American, okay? Everyone around the world, that one is fixed. It's like a base level, so. And then number two, now there are certain countries that have exemption from the 10%, and they have a higher tariff related to compared to the rest. So you can see here with China, okay, having a reciprocal tariff of 34%, okay, on imports. And I'm going to teach you what are tariffs. Some of you might still be asking, you don't understand what tariffs are, and we're getting into that, okay? European Union, 20%, Vietnam, 46%. So you can see it's different countries have different. You can see here Madagascar have 47%, okay, which is quite on the higher side. We have Cambodia here with 49%, etc. Okay. Now, there's something important that you should know as well. Okay. And that's the good thing about technology and artificial intelligence these days. So it helps us understand what are we really dealing with. So there's something here that says Trump's reciprocal tariffs, okay, aren't based on actual foreign tariffs. So for the people who understand tariffs deeply, this is not these ones that they have here, what are charged to the US. So does China have 67% tariff on the United States? You can see here, according to research at the World Trade Organization, it is not directly a tariff that has been imposed on America, but rather, okay, what they say here, it's a trade deficit by imports, okay? US trade deficit by imports. But let me not go too far. Let's first understand what are tariffs. Then I'll come back to this. This is what has been trending. This is what is all over the news, all over the world, because what happened yesterday, what Trump was saying, is a historical moment. It is a historical moment because it's going to affect the whole world. Okay? If I come here, if you look at the charts, look at my charts. These are just gold, which is a commodity, my indices, and stocks. And if I come here, you can also see the dollar index. Okay? The dollar index over here. Everything is red. Okay? You can see most things are red. My indices are red. The dollar index is red. The stocks, individual stocks here, and I don't have all of them, but a big number of the stocks are red. Okay? If I come here, let me show you a website that I use a lot as well. Here, biggest companies, just on TradingView. Okay, so it's a link on TradingView it tracks all. No, I don't want this one. Stock heat map. Yeah, I want the heat map. Okay, so if you look here, you can get to see that all stocks are in the red, and this was according to yesterday. Okay, today when markets open, because you can see here Microsoft is down 1.7%, and in actual you can see where's Microsoft, it's more than 1.52. So this will update. So most markets are in the red. Okay, how is tariffs affecting the whole world? Okay, so Poleni, can you guys see my screen? I can see Clinton saying he can't see your screen. Can the rest see? Just there was a problem last time. So okay, guys are saying they can see. So I don't know, Clinton, maybe it's on your side. So thanks guys for the quick response. So let's get this over with. Okay. So what is this? So how are tariffs affecting? So let's talk about tariffs. And this is the link I've sent to you guys. So I hope mumepata this link and go through this. Trading requires you to do a lot of research. I've done a bit of the research for you guys. So I've sort of compiled it here. So just make sure you go through this. You'll finish this read in less than 10, 15 minutes, depending on how quick you read. So tariffs are taxes imposed by governments on imported goods and services, okay? Taxes imposed on governments on imported goods and services, typically calculated as a percentage of the item's value. They serve multiple purposes, including protecting domestic industries from foreign competition, generating government revenue, and sometimes sometimes leveraging in trade negotiations. Like what is happening right now, there's a lot of trade negotiations that are happening. By making imported goods more expensive, tariffs aim to encourage consumers to buy domestically produced products, thereby supporting local businesses and employment. So let me talk about that a bit. Okay, let's talk about it. What does that mean? Now, when America is saying they're increasing tariffs on imported goods, it basically means if China, and let's use China as an example because China is the biggest trade partner with the United States. Okay, so let's use the automotive country as an example. Okay, so let's say China is sending cars to the United States. For example, we've heard of BYD, which is giving a lot of competition to companies like the electronic automakers, vehicles, EVs. So BYD, for example, so that's a Chinese automotive company. Okay, if they're to send cars to America, let's say, for example, one car goes for, let's say, let me give a pragmatic example, $100,000, just an example. That's on the higher side, but let's say that's what happens, okay? So we're looking at the tariffs, okay? Okay, so China's tariffs are reciprocal around 34%. So you find that now, if this gets 100,000 from the Chinese market, okay, it's going to enter US at, let's say, 135, 134, 135. You have to take, this is rough figures, okay, not taking everything into account, but just as a rough figure. So if you buy the car in China and you're in China, you're going to get at $100,000. Now, in China, in America, if you sent the car and you want to buy it, you have to pay 35% much higher, plus a bit more charges. But let's talk about the 135 fixed, okay? So you're buying it at 35% more expensive, okay? And that happens a lot. So this is what happens when you buy a car from China into America. Now, why do they do this? Why is they making it more expensive? Now, this is to encourage people to buy things domestically. Okay, so they're attacking Chinese people to what they were saying competition. So they're trying to control competition by increasing the prices of goods and services from another country and keeping theirs stable. But I'm also going to show you that this also affects their economy as well. Why are Tesla shares down? If this is something positive, then why are Tesla shares going down? Why is it not going up? I'm going to talk about that. But on the first end, it imposes is that they want it to be the product to be much cheaper, increasing the value of the current companies and their goods. So people now rely, instead of me importing a car at that price, why not just buy a Tesla, for example, at 100,000? It's less costly, it's less, I won't incur as much charges as what I have from Chinese goods, okay? Now, this also affects the Chinese people because if America is a big consumer of their goods, it's going to reduce the demand for importation of those goods and services. Sawa? Make sense? So the first step for tariffs is to be able for people to start using their local consumer goods much more and services much more than relying on outside goods. Sawa? So that is sort of a little bit of the reason what Trump is saying, make America wealthy again by Americans relying on their own products. But you're going to see this e-game, yeah, fundamentals na imposing this stuff. It's a tricky game. You have to get it. There's no getting it perfectly, but you have to sort of get it right at the right time. Okay, so that's just an example of what they mean by the industries playing around with foreign competition, generating government revenue, and sometimes trade negotiations. So a bit of historical context of tariffs. There's a time they did it back then, early. It was an early revenue generation, long time. Okay. Protective measures, and I'll talk about this towards the end. These are just historical stuff. I wrote for you guys to read in the document, this one that you're seeing here that I've shared. Okay, so early 2025, the US imposed the 10% universal tariff, what I was talking about, to all imports from China, Hong Kong, starting on March 4th. And then now today, Liberation Day, not today, sorry, but yesterday is when now he brought more tariffs or higher tariffs on certain countries. So, economic impacts. Now, this is important. This part. How does it impact the economy? Consumer prices. Tariffs have led to increased cost for imported goods, what I've just explained to you people, okay? Contributing to higher inflation rates. What does higher inflation rate meaning? Basically, when goods and services start increasing in price, that's what we call inflation. When the prices of goods and services have gone up. Okay. For instance, the recent tariffs are projected to double U.S. inflation by 4%. Now, if you're a fundamental person, you already know this is going to affect the most vital thing that affects all markets, which is interest rates. And I'll talk about this towards the end. Okay. Manufacturing sector. While intended to protect domestic industries, what I've just explained to you, tariffs have increased production cost for manufacturers reliant on imported components. So you find companies like, especially manufacturing companies, where they're relying on things from outside so that they can manufacture their goods inside, because getting them from outside is much cheaper. Maybe access to them, making them, the labor of making them is much cheaper, so they rely on doing that. So now, for example, if now they're bringing in goods from China, which were much cheaper, which were helping in manufacturing, it can also be a negative effect to the local manufacturing companies by making their local goods much more expensive because it's more expensive to manufacture. Okay, so it also affects the American people depending on what industry you're in. You can see here, there's one of these things, one of my stocks that I'm looking at is sort of a bit on the green side. Okay, and I'll talk about this later. It's a bit on the green side. Why? Because Netflix doesn't really much require, it's not a manufacturing company where they're relying too much on imported stuff. Okay, so you think they're sort of still in the greens, but I'll talk about that later. Okay, global trade relations. Affected countries have responded with their own tariffs. Okay, I'll talk about this, and financial markets uncertainty are surrounding trade policies lead to market volatility. What you're seeing, if you look at the dollar index, the last time we had markets falling almost 2% in a single day was a very long time. It's very normal on indices, gold, cryptocurrencies to see 2% fluctuations in a day. It's actually so normal. But when it comes to currencies, this is not unheard of, but it's really rare. Okay. And one thing that I also wanted to show you guys, just because the tariffs came out doesn't necessarily mean the market has started going down. Okay. If you look at this, the dollar started falling long time. We got a top here in the beginning of January before Trump's inauguration. Okay, if you look at S&P 500, okay, we got a top here. Market started going down way before this tariff stuff. If you look at US 100, market started dropping way earlier. If you look at US 30, market started dropping way earlier. Okay, so if you look at these stock markets, each of them, they started dropping way earlier. My point on saying that is that, and this is what we keep saying a lot, and Ken likes sharing this, and I always like reiterating what he says. The market is always ahead of reality, always. So always take that into note. If you're a new trader, always have this. The market is ahead of reality. What you're seeing happening, okay, was already factored in. When the news comes out, what Trump was doing yesterday wasn't what can I say? It's historic, yes, but it wasn't unexpected. Okay, what you're seeing in the market is volatility. Now, people are also reacting to it. You'll see that. But to many other people, it had already been priced in. And that's why you're saying markets. Look, where market has reached here, it had already reached before. So it had already been priced in. So the market is just continuing in that. The fundamental, the news that came out is now acting as a catalyst in the direction that the market was already moving. So at the end of the day, technical still remains very quite strong, as I'm saying. It had already factored that in. So what we're seeing in the market is a later reaction of what had already been factored in. So what sectors will be affected? And I'll talk about a bit of the industries, stock markets, and economies, because you guys trade a lot of currencies. Most of you trade the GBP, Euro, and I want to talk about that as well. Me, I have a big focus on stock markets. So I found it more interesting. If you've been in my previous videos, I've been talking a lot about commodities and the indices, and why I'm paying a lot of attention to them. So read this through. Let me jump a bit down. Could just go through that. Industries to be impacted, okay? Automotive industry, okay? That is highly, because they rely a lot on importing a lot of stuff that they use to manufacture in the cars. So this will be heavily affected. People who are sending cars to America, like you can see here, BMW, Mercedes, Subaru, these guys will be heavily affected. So if you go look at the, what is it called? The stock market, you'll find that the European stock market is heavily being affected, okay? Who's this drawing on the screen? Please, Mr. 1T, 1 plus. Okay, unfortunately, for me to be able to remove this, I need to stop sharing, then share again. Okay. Please, if you're drawing on the screen, please avoid that. So, cool. Okay, so these are industries that will be affected the most, but you guys are not really much into stock market, so read that. Let me jump straight into global economies and currencies, okay? High impact on global economies, reduced trade volumes, reduced trade tariffs make imports more expensive, okay? So you want to look at which countries are, hapa ndo sasa unatumia a bit of critical thinking and understanding and a bit of common sense, okay? You just do your own research. You want to look at which markets really rely on sending a lot of goods to America, okay? Because America, as much as they export stuff, they're also heavily importers. They rely a lot on countries from European Union, the European zone, I mean, and the East, okay? Exports-dependent economies like China, Japan, and emerging markets will have lower demands. These are going to affect those currencies. Now, this sides, Japan, the guys who trade USD, JPY, Euro, because Germany people in the Europe side, is going to really affect. And something that has also been mentioned before, and you'll read it in my article, sometimes, not all the time, it hasn't happened all the time, okay? But we've sort of had a lot of tariffs, heavy tariffs happening just before recessions come into the market. You'll see 1930s when the recession happened in the 1930s, the tariffs were high. Americans had already imposed a lot of high tariffs to the countries to other countries, okay? Just before COVID-19, well, the catalyst for COVID-19 was not tariffs, of course, okay? Also, the one in 1930s wasn't tariffs, but tariffs was in the picture that affected the whole world and led into a depression. In 2020, there were tariffs that had just been imposed in 2019 and 2018. Okay, so it's important to pay attention to this because it heavily, okay, affects the market, and that's why people are watching this because there's going to be a huge wealth transfer. Sawa. Okay, so you need to watch this. Which countries will be affected the most? Global economic slowdown. Global economists are already predicting that US tariffs could push Europe, Asia, and the UK into a recession by slowing down international trade consumptions. Okay, higher inflation globally. Okay, I want to talk about this pia kidogo. Tariffs increase cost of goods. I've already explained that. Higher prices are passed to consumers, just the same way I've explained with the example of buying the car. The consumer at the far end is going to be, the cost of buying goods is going to be much more expensive, okay? So higher prices are passed to the consumer, leading to imported inflation in many countries. Sawa, hiyo mmeelewa? Central banks, now this is important. Central banks may be forced to hike rates. They may be forced to do both of them, to hike and also to lower them. Okay, there's a part here I was explaining something in my article about also them having to decrease their interest. Somewhere, I'll come to that, okay? Central bank may be forced to hike interest rates to fight inflation even when economic growth is slowing. This is called stagflation, okay? Stagflation. Now, today, tuko class economics. Stagflation is where there's high inflation, so prices of goods are going up, okay, and services, but the economy is slowing down. There's low growth. Now, this is a position we do not want to be in because if prices of goods are going up, now watu hawa-earn pesa, who's going to afford anything? Prices of goods are going up, but there's no one able to afford them. Okay, so when central banks step in to hike interest rates, to increase interest rates, okay, is a measure of trying to control inflation. But if you're increasing interest rates and you're having slow growth, okay, how will they control inflation? Because remember, when interest rates are higher, it is harder to borrow or more expensive to borrow money. If it is more expensive to borrow money, okay, then the economy is going to be at a slower growth. I hope you're getting my point. So it's a really tricky time. It's something that is giving the world economic leaders a very tough headache. Okay, ni kubaya. Okay, I'll repeat that again. High inflation is when prices of goods and services are getting higher. Low growth is when the country is growing slowly. Okay, now if you have high inflation where prices are expensive, but people are earning the same or far less than before because there's low growth, how are they going to afford the higher goods, the more expensive goods and services? And if central bank steps in to control inflation, because how do they control inflation? By increasing interest rates, making borrowing harder, but the economy is already slow, it's going to be harder for people to borrow, making the whole situation even worse, leading to even worse recession. So this is going to heavily affect not only the markets, the stock markets and all this, but the individual people living in different economies. Okay, so impact on forex currencies. Now you guys trade different currencies. I won't get into one specific one, but just looking at a couple, because these days I don't trade currencies much. Typically, the USD is going to strengthen during trade wars, and that's what we have already gotten to see. No, USD strengthens during trade wars and uncertainty because it is a global safe haven. Now, this is going to be the reaction later on. You can see the dollar has really dropped. Okay, so what happens at first? You see the dollar really dropping. Then, if the whole world is getting into a global recession, kimeumana, okay, the dollar is going to act as a safe haven where you're going to see again the dollar starting to strengthen on the higher side. But at first, this is sort of a reaction what you get to see when it's just been imposed. And when you're doing technical analysis, we tend to call this more or less, I tend to call it, also some traders tend to call it what we call an exhaustion candle. Let me show you, for example, like what happened during COVID. Yeah. So here, you're seeing during COVID, markets ended up shooting up. Okay. We got that exhaustive candle to the upside because market was already in an uptrend. Okay. Then we got one strong, exuberant, exhaustive candlestick, which just pushed higher, took a lot of stop losses, stop hunts. I got a lot of entry orders for the big players, and they got into the market. And what happened after that? You're seeing markets went to the downside. So that's basically what I'm talking about here. The first reaction is people react to the markets and to the news. Then the world starts, and that's if, okay? Remember, what I'm saying is not mandatory. It's an if. It's a cause and effect situation. If this happens, then this is going to be effect. Okay, so if we end into a recession, it's easy to see the dollar starting to rise again. Yes, now we might say, oh no, the dollar is down, we're going to go down. But if the world is entering into a position where we're starting to see a recession and such happening, we're going to see the dollar rise, we're going to see gold rising as well. Okay, and that's what we're already seeing. You can see today gold had started dropping, sort of coming back up because people are going to buy it a lot. It's a safe haven for many people, so it's going to retaliate and move to the upper side. So it's important to understand that cause and effect relationship. Okay, so that's in the short term. Okay, medium term, you're going to see US inflation and slower growth. Okay, this one leading to weaker dollar. That's what we're already starting to see. This might force the interest Fed to start cutting rates. It's a tight one. Okay, there's increasing rates, cutting rates, depending on how or what is happening to the market. There's Chinese yuan. You can read about that. I'm not really much into Chinese yuan. Remember, we never trade Chinese yuan. Why? Because it is not a free floating currency. Okay, so you can do more research on that if you don't know what a floating and fixed currency and free floating currency is. Okay, so do some research on that. Euro. Okay, the euro and the yen are exposed because economies are export driven. Okay, and as much as they're export driven, they rely a lot on America. And that is why, being a superpower, you have a lot of control. You know the quote that we like saying, when America sneezes, the whole world catches a flu. Okay, because whatever those guys decide to do, like what just happened yesterday, it ends up affecting the whole world. So tariffs are lower. European, Japanese exports to the US, yes. So emerging countries and all that. So go read the rest of this. Read the rest of this summary. I don't want to read everything. That's why I sent the link for you guys to do your research and comment as well. For most of you, they have shared them. Okay. This is now my other account. So when you get it, once you log in, remember this is Notion. It's a free account. Just log in. Then you can always come and comment. Okay. This is not a logged in account, so I can't comment. You just come and click on something, comment here, and you can always have what you call, and this is what I'm working on, collective intelligence, where you comment, we see what your view is. Some of you might not be agreeing with what I'm saying. And also what I'm saying is not necessarily 100% that's what's going to happen in the market, okay? So you can always come here, share your comments, and you can always come and discuss there. It's always a discussion forum, okay? Trying to understand, and also the questions you have, I can also be looking at them and giving you answers right there after the meeting has already elapsed, okay? But in a nutshell, That is what tariffs are, and that is how they affect markets. Okay, so you need to be very, very up to date with how tariffs affect the market. Do not just negate the market and saying you're a technical analyst or I'm a short-term trader. I don't, long-term markets won't affect me. It's true. Most people, you can still make money, but at the end of the day, why we're here today and why I'm teaching you guys is because you want to get a deeper understanding. If you're in this industry, do not just have bare minimum. Get deep, understand. You never know what it might help you in the future. Okay, so that's what I'm looking at. I still see gold still being, especially with these tariffs being introduced. Look, when tariffs tend to happen immediately, what has tended to happen, we normally have that fast reaction of the markets, just for markets to come down to certain sanity. Okay, so you, like what I was saying on the dollar, you might see the dollar now crashing, but this might be a bottoming, okay, of the market where we might come get some double bottom around here, okay, and you start seeing market getting stops here and start moving to the upside or from here where it is. Okay, so you just need to understand what is happening in the market. Gold can be a very good safe haven for many people. We've really been rallying on gold. Gold has been on the freaking bull run for a very long time. Does that mean it's the end? Doesn't necessarily mean. If the imports tariffs get worse depending on what happens and how the rest of the world, remember, the rest of the world has not yet retaliated. They just imposed it yesterday. They've not come back and said, okay, mumetufanyia hivi, si tutakufanyia hivi basi. Okay, that has not happened. So there's still a lot of volatility yet to come in the market. So it's important to be very okay, proper risk management. Okay, for me, what I keep saying at the end of the day, look, I'm a trend trader. I understand fundamentals, but I still focus a lot on having trend following strategies because, like I said, markets still react in the direction of the trend. The fundamentals of the news act as a catalyst. The fact that markets are moving down, okay, there's a reason. There's a reason why markets are moving down. And I've always taught this to many of my students. Look, this was an uptrend, okay? Look, and this was, let's talk about this. This now technicals, okay? Now leave alone fundamentals and all that. This is just technicals. Lower low, lower high. This is the daily chart. And when I teach my students, I always say, I'm using that, and then I'm focusing on the Dow theory, focusing on the higher time frame. My higher time frame is which one? The daily chart. Why the daily chart? Because it's the significant time frame that many traders are paying attention to, both the long-term and the short-term traders. So if you're looking at this, you're looking at lower low, lower high, lower low, lower high, lower low, lower high. Then we got sort of a shallow lower low, okay? And what happened after that? Break of structure. We had a BOS, break of structure. Market started to the upside. Once you see a break of structure, my friend, you do not want to be focusing on trading that direction anymore. You need to start taking, if you had shorted here, if you're just looking for sales, you need to change your narrative, okay? When the new information comes into the market, market has changed narrative, move in that direction. So you can see market started moving higher high, higher low, higher high, higher low, higher high, higher low. We failed to create a new high. Market got some very bearish information. And what did we get after that? BOS. And notice when the BOS happens, the break of structure, market, if you want to know you have a good break of structure, market will always break of structure with strong momentum or strong candlestick closure. You can see these strong candlesticks that closed above. Look at the strong candlesticks that close below. It's an indication that market has broken below and markets are now in a downtrend, okay? Lower low, lower high, lower low, lower high. Now for me, if market breaks above this level, okay, then that's another long-term next 3-4 months. I'm looking for markets to start moving to the uptrend. Okay, I do not wait for that break fast. I start looking at signals down here. So for now, I wouldn't necessarily say market is in an uptrend. No, just because tariffs have happened and all that, markets could continue moving. Remember, the trend is your friend until the trend is broken. Okay, for example, here we could start seeing indications that market could start coming into a bear trend once we started getting this failure of markets to break higher. Another thing I've always shared with you guys was long-term effect of the markets. Okay, now let me show you on a 1 week market. Where did I put this data? Here. Okay, so look, they've always been, this is research data that I did on my own. Markets tend to repeat themselves and they repeat themselves a lot, okay? Look, when Trump became victory, this is the dollar, Okay, when Trump became president in 2016, that's when I started trading. Okay, and this is why you tend to look at data. As much as we're understanding fundamentals, let's also understand technical history. Look here on the weekly chart. This is big picture. When Trump became president, we had the rally of the dollar. When Trump normally becomes president, he has a lot of promises. Okay, he's a biashara man. Okay, when I become president, I will do this. I will do this. We are familiar with some people who say that locally. Tutafanya hivi na hivi. Okay, so with those measures in place, people vote because of some of those reasons they've said. But when Trump became president, we got to discover that some implementations of what he was saying was not quite easy. So what happened to the dollar as he was becoming president? We got that rally, rally, rally. Look what happened, okay? Sort of just almost the same thing here. If you look at what date is this? January, okay? That week of January, when the year started, towards the end of December, January was starting, the dollar started dropping. And it dropped like that from 2017 and bottomed in 2018. So for a whole year, markets were in a downtrend. Okay, so it was crazy time. Okay, crazy time. And then Biden comes into presidency. Okay, November 2020. Okay, okay, so let's leave Biden out for now. I want us to compare Trump so that you don't get confused. So Trump becomes president, dollar rallies, top of December, market gets a top, starts coming down. Okay, got a downtrend for the next 1 year. Look, similarly, Trump wins presidency November. Look, market tops when? January. So it's not a coincidence. December, January, as President Trump is becoming inaugurated into the presidency seat. What happened after that? Look at that crazy drop. Okay, look at that crazy drop to the downside. And I had this analysis and I shared with a few of my students. Okay, because I was also looking at sort of this pattern here, sort of like a big picture flag pattern, an impulse correction here. Markets really played around with that. I wasn't only looking at that pattern, I was looking at history as well, believing that many things Trump has promised with a lot of things, is if it was Bitcoin, the economy, make America great again. It's not a bad vision, but how is it realistic? Can it be implemented? And what happened again? Same thing. Trump wins, dollar rallies, people are excited. What happens again? Dollar drops. Okay. If you go to the stock market, now you can go look at that on different currencies as well. Okay. Now may I pay attention to a lot of these indices. Okay, so here I was looking at the same thing. So back then, Trump won and the markets ended up rallying. Biden won, ended up rallying. This time he won again. So during that time, if you took a trade, so you want to look at this. Most times when presidents win, you want to look at how many times out of all the presidents that have become president, how does the market react? You get that rally. But now we're sort of seeing that market coming down because markets were already at very overpriced levels. Okay, remember Biden became president just during COVID. Markets had crashed. So after his presidency, the dollar continued going up because he had just won presidency. Because he was coming to bring people out of the economic crash. But what you want to look at is that always pay attention to history, understand that, understand the fundamentals, know how to put that together. This takes time. Don't really pressure yourself. It takes time also and experience. Me back then, I didn't know. But the more I trade, the more you're in the markets, the more you get that. Now, imagine you had that indication, you understood that, okay? Markets, so for example, you understand that top, you're expecting the dollar to start dropping. You sort of have this pattern. You come on the daily chart, market breaks that structure that we've just talked about, okay? Where is it? This one here. Market gets that break of structure, BOS, okay? And then our market, that was a free fall. Okay, look at that. This was if you're trading the euro and such pairs, I wasn't in this one because I don't trade those pairs anymore. But just doing history and understanding, this was a very good long-term trade. Even short-term, if you're trading short-term, that was a good sell-off. Okay, so you need to understand those things. Do not negate the tariffs and the data and the fundamentals so much. Right? I see people saying technicals. It's good. Understand technicals, understand price, because everything at the end of the day is embedded on the price. It's what you're seeing here. It's what is happening around the world has been. It's what the price is a reflection of what is happening around the world. So, but understand the tariffs, understand those breakdowns. And the more we do these videos, like me, I like teaching. Like, that's what I'm doing for you guys. Articles, I'm giving you guys the webinars for free, okay? So that you understand these things. It's universal stuff that you're not taught in school. It's school might teach you this, but they don't get practical. Now over here, you want to understand the practicality side of it and the technical part of it, and then how you can benefit out of it. Okay, if you look at this, let's go to the cryptocurrencies side. Markets are in the red, okay, but also that's sort of a reaction. Okay, yesterday most markets were in the red. This was yesterday. You're seeing this red candlestick. You're seeing most of these are in the red zone. So markets get affected all. Okay, not just one market. You're seeing the currencies. You're seeing the indexes, the stock market, this crypto markets, commodities market. All of them, when America, like I said again, when they sneeze, everyone catches a flu. So I hope you've understood that. This is a recorded episode, so I'll share this as well. I remember I said I won't be sharing too much of the webinars so that I can encourage a lot of people to join. But if not, here it is, okay? And if you, the link, I've sent it, I'll also put it on the YouTube description and all that. But I hope that I've brought some things to your light, okay? Understanding what tariffs are, sent you those links, explained it here, shared with you a few stuff. Remember what I said, this Trump, the reciprocal tariffs aren't based on actual foreign tariffs. So it's not that China have put a 67% tariff on America, okay? No, no, no. It's just their way of breaking it down, and they've explained it here. If you go to that website, they've explained it much deeper here under the World Trade Organization, okay? So economics and trading is much deeper than what meets the eye, and this is what really excites me, because every day is a learning lesson in this market of trading. Whatever market you're trading, every day is a learning lesson. You're always going to get new markets, new reactions, new president. Like, look, during Trump, Biden's presidency, most of you have been trading, markets were slow, okay? But also, they were very directional. If it's up, it's up. If it's down, it's down. Right now, people are having a hard time because, Trump is imposing a lot of stuff. When Trump tweets, Trump updates his stuff on tweets, okay? Biden wouldn't really do major stuff on tweets. If it's a major change in economy, he'll go in front of the world, speak in front of media people and say this and that, okay? So it was quite slow and quite nice. But Trump's presidency, you guys need to be up to date. Like for me, for example, on Twitter, on my phone, I don't like putting notifications because you get a lot of notifications and it's a bit confusing. But what I do on Trump, if you go on Trump and the White House and these people, you can always come and put personal notification on this person here. Okay. So if you're not having Twitter or X, okay, you should have it, because this is where information comes from for at the moment. So make sure you notify and just have that market in itself. So me, I tend to look at very few people and have it so that immediately they tweet or do something, I don't start wondering what is happening in the market. I have that actual information. So just a few things people are saying in the chat room. It's so boring to trade now, hard to enter, especially for swing traders. Yeah, that's true. It's sort of true, and also it depends with your approach, Mary. It can give it time, give it time. Maybe you might still get a good entry, because also me, I'm a swing trader. I tend to hold trades for a couple of days. Like I was with Ken earlier on today, and he had some trades on GBP USD and I think Euro, and he was having a tough time. Let's see that. Let me show you. He was having a trade on GBP USD. For example, let's use Pepperstone. So he had a trade here, somewhere here. I think it took it some time back. So I think it was on this day. So markets ended up going up, then it went down, down, down. Then all of a sudden in one day he got all his profits. So it's up and down days, not getting trades. But you see at the same time, like I said, what is it called? The news and the data is more or less catalyst for the direction. Because you can see here, direction started long time. What I'm talking about, the higher highs, higher lows, higher high, higher low. It started long time. So if you got an entry, the corrections have actually been quite slow. So just depending on where you got your entry and your approach, it will all depend on you. Okay. Raymond saying, Hello, could you share the link to the Notion article already? Yes, yes. I'd shared it here. Let me share it again for those who do not have. Ndio hiyo nimetuma hapo kwa chat. Okay. Caleb, what do you think of this second quarter? Is it a better quarter than the first quarter according to your experience in terms of volatility? Well, volatility, I can't predict really because right now you're seeing volatility is going to be there, especially this month of April. Now, remember, April 20th marks 90 days of Trump's presidency. When he became president, there's a lot of speculation on what he's going to do in his first, like your first 90 days, even here in Kenya and everywhere around the world, when you become president and you're inaugurated, your first 90 to 100 days define your presidency. What are you going to start doing? What are you implementing? Who are your cabinet people, ministers, all those things, so that people can understand what you are saying is actually what is going to happen. Okay. So volatility is going to be there, especially this month of April. That I can assure you. Why? Because you can even see, if you guys don't know, VIX. VIX is what we call the volatility index. It gives us indication about volatility in the market. Okay. Now you can see volatility has gone quite high. It's starting to go back high. Okay. And that really shows us indication that markets have become reactive and erratic. Okay. So it's important to watch that moment. So yes, so it depends on you. Some people find volatility as something negative that affects their trading. Some people find volatility as a way of making money. Okay, especially a lot of day traders, because leo market inaweza panda up 2%, 3%, kesho ianguke 4%. So it depends with your approach. Okay, so for me, I find it interesting. It's a learning lesson. As much for me, I'm still seeing, as much as these stock markets have gone down, okay, I'm still looking for major levels. I still expect this stock markets to continue moving lower. Okay, according to my research, according to data, where we are, markets can hold, yes, but there's an approach I've been doing and some data and research on. I expect the stock markets at least to continue dropping down, at least to get some double bottom around this level. That's on that Nasdaq 100. Also, as well as this one, I'm looking at a level here, the $40,000 mark. So round numbers as well. So yeah, so for me, opportunity is going to be there. Okay, so this quarter is going to be quite volatile. So if I scroll up a bit, there was a question I'd seen earlier on about Kenya. So Nick had asked me, got a question on the same. Yesterday, after the tariffs, major pairs were affected. Kenya was also slapped 10% tariff, yet our Kenya shilling stabilizes at 129. Why is our currency not affected? Good question, my friend. USD KES. Come here, you look at the USD Kenya shilling. Okay, so no, don't leave. So why is Kenya's currency stabilizing? What is happening? Why do our markets look like this? Okay, so that's what I was mentioning earlier on to you guys. Remember, the Kenyan currency is not a free floating currency like the United States and the other pairs. It's not a free floating, it's a fixed currency. So you guys do research. I can't feed you everything at once and get off topic. Free floating. So here, come look at free floating currency versus fixed. Okay, so you find that free floating currency is one whose value is determined by the forces and supply and demand of the exchange market. This is free floating. Okay, whose value is determined by the forces of supply and demand. These are the currencies get their prices. You see, the European, if you're trading Euro USD, it is not that the Euro people sat and said, me, tunataka hii price. The USD people, no. They did not sit and discuss that. It's free floating. Supply and demand, which is caused by CC, the people, okay, is what will determine that without government intervention. Unlike fixed exchange, like the Kenya shilling, the Chinese yuan, okay, all those are fixed currencies. The opposite now, where the value is pegged to another's currencies or commodity. Okay, by that we mean, okay, let me get a better definition. It is controlled by the government. Let's search here, fixed currency. Fixed currency. Okay, fixed currency versus free floating. Okay. So if you come here, come to Investopedia, I did a good research on this one. Fixed exchange regime is applied by a government or central bank that ties the country's official exchange rate to another country's currency or the price of gold. Okay, so these are countries that the prices are not affected by the supply and demand that we normally affect the other currencies. Okay, but it is pegged, the government is the one that is in charge of controlling that. Now, also the government doesn't wake up and says today we want the USD Kenya shilling to be at 160, 130 and all that. But the good thing about that, they don't get a lot of reaction that we see on a free floating currencies. It has its benefits and its negative effects, but that's what tends to happen. So do more research on that. Just go check out what is fixed exchange rate and free floating exchange rate. So that was a good questions. Excuse me, which site were you using to understand tariffs? I wasn't using any site. I was just here on this is Twitter. I was on Twitter's White House. This is also not a website. This is just Twitter. They just posted here on the White House page. And then this is WTO, World Trade Organization. This one, I'll really need to do maybe a different video to show you how to use the data here, because it's quite complex and quite heavy. You need to come here, go to the tariff side and really do a lot of research. Huku ni deep. So maybe next time I can do a different video on that. So Nick, leo newbies wanasikia Greek. I hope the newbies you've understood. I've tried to simplify it as much as I can. I can see Leroy saying insightful. Good. Caleb, have you seen the flag recently in your pairs? Now, may I trade a lot of the, what is it called? The indices. So not really. Not really. I haven't had any flags of late. But like I said, last week, or was it last week, but one, or sometime when I did, I've really changed my approach. So I don't only trade flags. There's a different approach that I do. And a lot of our students are going to get first-hand information on that. We're really updating our teachable side. You can see here, I have our accounts here. Okay, so Ken and I have really been working on uploading, because if you don't know, we've taken our courses fully online these days. So we're doing a lot of content on the back end. We want to really update that, because what we have is a really, on the online side, it's a kitambo kidogo. So new content is about to come and is dropping really soon. So wait on that, especially new traders. And then I'll update you there on what I've been backtesting. You can see here I've drawn some moving averages and Nini, how I'm using them and how I'm backtesting with them. So cool, guys. So allow me to end there. Personal question: what quarter perform best in your end? Now, good question. What quarter performs best in my end? Now, I've always had this where even in my backtest data, it normally shows me start of the year. And so first quarter, like I remember last year, I was very doing a lot of good. Even if you watch our YouTube and our podcast, Ken and I used to talk about how he had a bit of challenges in the first quarter. I had a very good rise. So in the first quarter, let's say first 4 5 months, and then the last 4 5 months of the year is when I perform well. Why? Because I'm heavily a swing trader. I tend, even in my backtest data, I tend to find markets normally having a lot of change of direction during the half of the year. Okay, and that's why I'm still saying I'm expecting these markets to continue moving down, and at least until around June, July. Okay, markets could continue dropping and then get a bit of a consolidation down here as long-term executions and long-term positions are taken before the rest of the quarter goes up. But that's just my own experience, so I can't tell the future, but that's what I think. Okay. So, guys, so allow me to end there. And remember, I'm seeing something Nick is also sharing, which is important. Yes, the stock exchange markets just updated. Okay. And I talked about this in a previous video where we changed daylight saving time shift changed. So what Nick is saying in the group is true. I don't know about the Asian and the others, but London starts at 10 a.m., which is true. Okay, and New York stock open starts around 4:30 p.m., which is true. So all those are East African time. Yes, 10 a.m. Kenyan time and 4:30 p.m. East African time is when the stock markets in London. London starts at 10 a.m. stock markets, which now you start seeing a lot of effect in the markets and these ups and downs. Now that also has affected the times that markets are going to be removing news data. So good stuff. Good point there. So Brian Otieno is the deposit $100 on Pepperstone, give you access to the classes. Yes, yes, Brian, it does give you access to that. It will give you access to also our content that we are working on. It's already there, so we're updating it. We're just putting better updates. And here, now that we've transitioned online, what Ken and I are planning to do is every 2 days or every day, we're planning to be adding analysis, market analysis on the portal, student analysis, what we're seeing in the markets. Hizi vitu tunaongea hapa from the webinar, we won't be putting on YouTube. We'll be putting in them for the private students who are able to have our course. So yes, depositing your $100 in Pepperstone gives you access to this content and data on our course end. So you'll have access to that. And then the $250 course, the one that we've slashed our course from 50,000 all the way half to $250 where you pay us 25K, and that one now we are going to have a quorum. So towards the end of this month or beginning of May, we are going to have one-on-one classes now with about 10 people only. We don't want to have also too many people, where we'll be taking those people through our course for about, now we'll be having online webinars with them every like twice a week and teach them deeper stuff about the Forex market. So, but just depositing the $100, you have access to the course, okay? But the 25K one is where you pay us, then you get access to now our one-on-one services. Because Pepperstone came in to be able to fund you people and sponsor you people to get access to the course so that you can trade as you learn. So you're welcome. Thank you, Dennis. Thank you so much. I'm new to trading and I'll read more on tariffs, free floating. You're most welcome, guys. Lewis, those who missed on the new markets that was launched, can you comment on that kindly? Oh, so to those who missed, so yeah, I did that on Monday. Many people, most people of you joined. We were full. We were about 100. Many people couldn't join. I shared the link, okay, which I'll share again on YouTube. And not on YouTube, but on my Instagram page and WhatsApp story. I'll share that there. Okay, since it's not a topic for today and it's my own initiative, that is not together with Financial Hub, so I don't want to confuse the two. But yeah, that's what happened, and I'll share that. So Mary, you're most welcome. And Buru, briefly expectation overview tomorrow NFP. Na mnapenda hii NFP. I never have any comment about NFP. It's tomorrow. I'm sorry Mburu, mi sikwangi mtu wa kusema this is what I expect and nini. When it comes to NFP, I might just watch and see what happens in the market, the reaction that comes out, and then I wait and see what happens next week. It's like what Nick is saying, and that's what we normally say. Pigs will get slaughtered. Yeah, and that's what normally happens. The pigs gets bulls, watu wa kununua, bears, watu wa kuuza, pigs mnachinjwa left, right, and center in a light way. But yeah, sorry Mburu, but I have no comment on NFP. But I like watching it. I like the bigger data. Acha siku za interest rates zikikaribia, let's talk about those ones. But non-farm payrolls, nah, I don't know. I'm new to this mentorship on crypto stocks. So yeah, karibu Samuel. We call this the highest calling of mankind. Hii game ni ngumu. Mtu asikuwahi kudanganya. My fellow people can comment there and say, hii game is not joke. If someone says, let me show you how to make double your money in 1 month, luck on your side you can, but consistently, my friend, this thing is not that. But not to scare you, don't get me wrong, I'm not being pessimistic. It's just that in the long term, you really need to factor in a lot. You need to understand a lot. Nika tu kwenda shule. Hivyo vile Nick amesema, good comments Nick. 4 years, hii stuff lazima ipe time. I don't want to give you hope and tell you in the next 2 months utakuwa umeshika hii stuff, but I'll be the biggest liar. I rather tell you the truth. Ujuange uko mbele, Caleb alisema ukweli. Let me just put in the work. Sawa? So thank you, my people. Thank you. Allow me to end there. Like I said, I don't go too off topic, but I've been able to answer a couple of your questions. So, but asanteni guys. It's quite interesting having you guys, spending 1 hour or more with you guys. Asanteni kukam. It also shows your interest in learning this stuff and getting interested in trading the Forex market. So see you guys soon. Thank you for joining. like I always do, I like giving shout out to everyone. So allow me to give shout out to all of you. Ahmed Mukhtar, Alex G, Ann K, Ashford Wahinya, Brian Otieno, Cecilia, Clinton, Kobe, Dennis, Derek Langat, G, Haron, hashtag Square Photography, Ibrahim Hussein, Isaiah, Jeff Mkenya, Kangale, then there's John Felix, Josephat Kimodo, Justus, Leroy, Lewis Watome, Mary, Marceline, Mburu, Morris Mureithi, Ndungi, Nick Gitao, Noel, OnePlus 60, the guy with the phone, Patricia, Raymond, Ridge Forrester, Sally Owenga, Samuel Njogu, Simon, SMOE, Soke, Victor Charlo, and Victor Richie Rich. Thank you, my people. Thank you for joining. It's been a good session. We've learned a lot, and you're most welcome. They normally say your name is the sweetest voice to your ear, and that's why I like always mentioning everyone's name and acknowledging your presence. So asanteni, my people, and I'll see you soon. You're most welcome.